So, you want to be a real estate investor, but where do you start? How do you know what information and sources to trust? That's where I come in. I'm Jonny Cattani, and this is the Investor Relations Real Estate Podcast. Hey guys, real quick, before we start, go to investwithcattani.com and download my free ebook, Is Commercial Real Estate Recession Proof? Now to today's show. Guys, and welcome to another episode of the Investor Relations Real Estate Podcast. I'm your host, Jonny Cattani, and I am joined today by Jason Mittman. Jason is passionate about family, friends, the outdoors, commercial real estate, public speaking, and business coaching. He's a competitive athlete and a mountaineer. He's a licensed Texas real estate broker, Society of Exchange Counselors member, and holds a degree in business from UTSA. Jason has over 25 years of real estate expertise, including analysis, sourcing, development, construction, leasing, finance, acquisition, disposition, and brokerage. Jason has invested in, owned, and developed across the spectrum of real estate, including medical office, multifamily, multi-tenant retail, land, hospitality, and single-tenant assets. Jason, welcome to the show.
Thank you. It's a pleasure to be here.
Absolutely. Looking forward to chatting today. We obviously have a lot in common. Would love to do an entire episode on just mountaineering, but we won't get into that. Take us back to the beginning. You got 25 years of experience, but take us back 26 years. What were you doing and what got you into this space?
Surprisingly, it's actually now 32 years, but there was a stint in between where I was a fellow for the UT Business School think tank. I was a freshman in college, actually a senior in high school. And I was very, very fortunate to find an amazing real estate mentor. And he took me under his wing and, I had a lawn business and I went to go bid on his yard, and it was clear I was way above my head, even in high school, for that. He needed a gardener. Gave me his card because I was honest with him and said, me nor none of the guys that work for me can do this. And I called him a couple of weeks later because he gave me his card, call me if you ever need anything. And I asked him, I reintroduced myself and he said, how can I help you? And I told him, I want to know how you make your money, which only an 18-year-old kid would be dumb enough to ask that question, right? And he had this long pause and goes, are you asking me how I make money or how I'm wealthy? And I said, well, they're the same thing. He goes, no, they're not. Be in my office, Monday or whatever day it is, this time. It's a law office, so dress appropriately. So I show up, come in, it's huge. It was a whole floor of a building. And he sat me down in his corner office and said, I make my money as a lawyer. I'm wealthy from real estate. Do you want to learn? And I frankly think I hit the lottery. He helped me for 8.5, 9 years, mentoring me, and was a father figure and had me do everything from, go paint the bollards on this building to sweep out the building. Now you know how to do it. Now go hire people to do it, always under his tutelage. And if they do it wrong, you're going to have to fire them. And this is a balance sheet, and this is a financial statement, and this is a loan doc and a lease, and this is what you have to present to a bank, and this is how these things work. And he would always force me to debate everything with him to learn. And it was, this is how to property manage. This is how you take care of tenants. This is how you take care of property. And it was kind of like a Mr. Miyagi Karate Kid lesson for over 8 years.
Wow. Yeah, that's exactly what it sounds like. I was kind of thinking the same thing. That's awesome. That's a very unique story. Obviously, not a lot of people get that opportunity. Again, kind of referencing the conversation we had, offline, you obviously are a huge proponent of giving back.
Yes.
You've done a ton of charity work and I'm sure that kind of stems from that. Not that you were a charity case any means, but, that kind of started that process, which I love to see. So, how did that develop your strategy and your business and what you are working on today?
Gosh, it really is intertwined, and I think it was essential. That's a great question. A lot of the lessons learned from him as that foundation that you build on, right? And you think of what your foundation level is, your mental attitude, into him, so much of it was critical on, it's in a spreadsheet. As long as you don't lie to the spreadsheet, the spreadsheet's not going to lie to you. What we're really bad at is emotionally getting tied. As you know, if the numbers don't work, it's like, crap, this isn't a good deal. And I've spent so much time. And, maybe if it turns out this way instead, well, that's called the best case. But you need to plan for the worst case and push like hell for the best case. And he taught me that, and how to really tweak a deal, and how do you add value to it. When you take something from A that was poorly managed or poorly maintained or poorly leased, and it's usually a trifecta of those three, can you fix it? In all those moving pieces of how to think of an asset. Is it laid? Are they problems you can fix, or they're just problems? Problems are, I don't know what architect and engineer let you think that design was a good idea, but there's no place to park and no way for cars to get in this retail. That's not going to work. Okay, that's not fixable. Versus, why were you with that same leasing firm for the past 5 years who leases a house and you own an industrial building? So it was a lot of mindset of how to think long term, how not to lie in spreadsheets. That's where we all get caught. And it's really, really hard right now, Jonathan. I mean, this just as well, if not better than me. It's a tight market. And if you want to do a deal and you see all your friends and your colleagues doing deals, you're like, man, I can't believe they got that done. I need to do one. And remembering, actually, no, you don't need to do one. You need to do the right one and not the wrong one. And to separate that emotion out and to build it conservatively with good advisors. And those are some of the things that built my foundation.
Absolutely. Yes. So many great points there. Obviously doing the right one. What are, when people are first getting into this and, maybe you're coaching them or you see them, what are some things, some strategies, some tips that they can use to, especially, listen, 3 years ago, you could basically trip and listen, we didn't know this 3 years ago, but now we know that you could basically trip and get a deal right for the most part.
Yes.
Not the case anymore, right? We're going to start to find out who the, not just the acquisition side of thing, but really implementing your business strategy is going to be so important moving forward. So what are some things that, beginners can really look at and should hone in on to make sure they're executing correctly?
Right. That's a great question. And I assume we're talking about, let me ask a clarifying question. We're talking about beginners investing directly and purchasing real estate, or are we talking about people investing in other people's real estate deals? You know what,
since you mentioned offline, you've got the book coming out about, vetting to invest in other people's deals. So let's take that route. Let's kind of talk about, in this landscape, obviously things, a lot of variables at play. So what are some things that we can look for when we're investing with other people?
Right. So when you're investing in other people's deals, you're giving up control and saying, I trust you as a fiduciary with my money. Right. And there's a few ways to look at that. Obviously, the person, everyone will tell you the person is the most important thing. And that's sort of right. But let's say you've got a great person and they have the worst asset. And you go, yeah, but that guy can fix it. Well, what if that guy gets hit by a bus? Can the deal survive? Or what if that guy goes, or lady, what if she goes through a divorce? Or what if she says, I'm going to go travel? Or what if he says, my wife's having a baby and I'm going to stay home and be the parent at home? Okay, but the asset still exists. So is it a strong enough asset? And there's a variety of questions you can ask in different categories, from visibility and parking and egress and ingress, if it's retail and signage, to industrial location and highway access, to all these different components. You can go by checklists. So can the asset survive from a location and a purchase price? For me, I don't like doing ground up because there's so many variables, even though it's very, very profitable. So it's things like, well, what does the market say? Is the market vacancy 50% or 3%? Are the rents $15 and you're getting $10 rents, and so there's growth? Or are you getting $20 rents in a $10 market? So understanding the asset and the financials behind it are key. The second thing alongside that is obviously the syndicator, the person putting the deal together, raising your money. Okay, what is their track record? Have they been doing it 1 year or 20 years? And there's nothing wrong with 1 year if they're getting a deal that you're buying at 25% of replacement cost at a very strong long-term low interest rate loan, and they have a good team supporting them, and they've got skin in the game, money in the game, signing on the debt, right? But if the person is very well established with a very long track record, the first question I'm going to ask is, tell me about a deal that went bad and how you dealt with that problem. And if the person says to me, I've never had a deal that goes bad, my answer is, okay, thank you. And there's no way I'm investing in that deal. I have been in this for decades. In every single property I've ever owned, there's one thing that's consistent. I get something wrong. Usually many somethings. It's like, okay, well, I was wrong on construction, or I did a bad job on that contract, or I did a bad job in that lease, or I predicted wrong on how long it would take to lease it up, or a million other things. And we write after action reports every single time to try to learn from them. And if you have somebody who's not learning or hasn't had a lot of failures, they're either the best, most genius oracle in real estate ever, or they're full of crap, or they're really due for a big whammy. And sometimes it's all three. And, you know, everybody thinks Warren Buffett is amazing, and he is. And he has had many, 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 many failures that he learns from. So what is the person's track record? How do they deal with failure? How will the asset stand up? And then the last leg that I just kind of mentioned is, do they have skin in the game? Are they putting real cash in? Are they signing on the debt? And if it's neither of those things, you need to be compensated much more in exchange for that additional risk. Because if the deal goes bad and they have no skin in the game, what's holding them to the fire with your money? That's the answer. Well, in my opinion.
Right. No, of course, that's huge. And as someone who's just really starting out, you know, and in terms of under my own belt, that's the biggest question I get asked is, am I putting skin in the game? And the answer is yes, of course, right? Like, I'm not going to, and listen, right now, you know, in the beginning, you're raising from your friends and family. So that's bittersweet in the sense of, you know, might be some more leniency, but also if things go wrong, you're, you know, going to see them at the next family function. But ultimately, that's the biggest question I get asked. And the answer is absolutely yes. And it has to be. And ideally, I do that all along the way, because I wouldn't do a deal unless it was something I wanted to invest in anyway.
That's right. That's right. And from the syndicator perspective, from your perspective, Jonathan, one of the things to keep in mind is, what is your risk tolerance? What are the other things going on in your life, right? So if you're a young guy, you don't have a lot of financial obligations, I'm going to tell you, dude, risk it as much as you can. And here's the thing, you know, lots and lots of billionaires and millionaires, they've been broke 2 or 3 times, bankrupt, legally bankrupt, and they climb out of it, right? And I know, and you know, from mountaineering, we know what will kill us. It is not a real estate deal.
No,
it isn't. And here's the super cool thing. Not only that, let's say you lose your butt, you lose it bad. You have friends. Are they going to let you go without a roof over your head?
No.
Are they going to let you go hungry?
No.
Okay. Are you going to lose all the knowledge that you acquired?
No.
You're going to lose your network?
No.
And here's the cool thing, the last part, the fifth part. Are you going to be really pissed off and going to work twice as hard as you did before to regain where you were?
Yes.
Bingo. Right? So a worst case scenario, especially when you're a young person, guy or girl, man, you can get hit pretty hard. You are not going to die. Take the risk, go for it.
Absolutely. And, you know, as an ancillary, and now hopefully, of course, we don't wish evil on anyone that doesn't come to that, but you also have a loss as well. So kind of another one of the, right, like you look like Amazon or even someone like Trump, you know, and they're not paying taxes and whatever, you know, we don't really have to get into all of that, but ultimately where that comes from are losses in their business.
That's right.
And
that's right. And if you came to me And like I asked earlier, so tell me about your loss. And you told me, man, I lost it bad and I lost it big time. What'd you learn? And you tell me, what mistakes will you know not to make again? And you tell me, you're the guy I want to take. Okay, you got my money because I know you've learned. It might be a smaller tranche, but you're ready for that next step and you're not going to make those most likely not going to make those mistakes again.
Absolutely. Couldn't agree more. So for someone who hasn't had a massive, massive loss, right? Let's say they've been in the last 5 years, right? We've enjoyed a nice market. What are some kind of more in detail things that we can look for from them that have gone wrong in terms of their business strategy that we can kind of correlate with that and say, okay, like that's, you know, we'll accept that as something that went wrong?
Right. It could be you burn through staff a lot, which is a problem right now, right? And so you're slow, for example, to get financials out, or you're delayed getting your annual K1s out, or you're burning through leasing staff to lease a space. Or another example is you budget wrong on construction. It just so happens that the market's going so fast, so high, that it makes up for you budgeting wrong in construction, whether the budget is on time or actual cost, or it's most likely both. So there's still a lot of areas, even if you get it right, it didn't go as planned. And you say, well, what would you do next time to design your plan different?
Absolutely. Yeah, it makes perfect sense, especially when you're dealing with the construction, especially right now with, supplies being variable rates, different things like that. It's hard to predict those things, and you kind of got to take that into account. Extra reserves in your capex budget, different things like that for sure.
Absolutely. And there are things that can have big consequences, which are new in our environment that occurred during COVID. Getting HVAC air conditioning in, you sign a lease, space ready to deliver, and you go, I got to wait 6 more months for my air conditioning. And the tenant goes, I'm not waiting 6 months. And you've spent $500,000 on everything else. And the tenant has a right to leave. And you go, okay, well, next time in the lease, I'm going to say supply chain issues caused by a pandemic. You can't leave. Who would have thought you have to write that in? And that actually happens. We went from the air conditioning issue on a project to we couldn't get the door trim. We couldn't get the door frames. It's like, well, we got the air conditioning right away. So it's the unaccountable. And this applies, Jonathan, in our other world, in our mountaineering world, right? So we're on a big climb and we've trained and we know it and we got a great team, right? Just like you have a great team in real estate, whether it's in-house staff or it's your accountant and your banker, everybody has a team and we're doing great. And somebody knocks down a rock above us, totally out of our control. Well, it could kill us quickly. And in the real estate world, we train, we do these spreadsheets, we've got a great team and we're going on schedule, and somebody knocks down a boulder on us. COVID lockdown, Fed changing interest rates, a war in Russia, which drive up fuel prices, and fuel prices mean that shopping center that you own in front of a Walmart, where your tenants, customers normally come in, they have to now choose, do I fill up my gas tank or do I go buy something from this tenant? The tenant can't make it, right? So there's all these boulders that can come crashing down on our deal. Like when we're climbing, you're going, man, I trained so hard. How could this be happening to me? That just happened. And they have to prepare for that, think that through.
Absolutely. And that goes to, having partners. Like for instance, the deal I'm working on, my partner's been doing it for 30 years, right? So very much leveraging his expertise and his knowledge. And it's important, to recognize that and don't go into things alone, especially just starting out. And honestly, I would be shocked if you could raise any capital from someone doing that anyway. So
Yep, I agree.
Awesome. So, kind of we've talked about, a lot of things that, COVID showed us a ton of stuff, especially in this space. What are some things you're keeping an eye on moving forward, macroeconomics and different things?
Sure. So there's a few things I do often, daily. Wall Street Journal. If I don't have time to read it, or let's say your reader or your listeners can't afford it, Wall Street Journal Daily News podcast. It's a summary in the morning and a summary in the evening. It's free. The Economist magazine, which, yes, it's go to the library if you can't afford it, and the Financial Times. So that gives you a broad perspective. And there are certain things I ignore and certain things I don't ignore. I ignore daily stock movement. Doesn't matter to me. That's greed and fear and AI algorithms. None of that's relevant in my world, right? But there are things that really try to do deep thinking and say, okay, like we just discussed, this happened in 2008. Interest rates rise. What else happened at the same time? Fuel prices went up, right? Okay, so you had to make the decision if you're a low-income consumer who got a no-doc loan on their home and says, fuel prices went up 30%. Which do I do? Do I get Pampers, milk, and gas, or do I pay my mortgage this month? So understanding in commercial that, okay, a lot of people took out loans. So we went through 2008, we get to 2010, now 2011, 2012, really hot buying. And those are 5 to 10 year mortgages. Well, between 2010 and 2012, where are we? About 10 years out. So in those interest rates were, let's say, between 3 and 5%. And you're going, gosh, that was great 6 months ago. But now, can that same deal underwrite at that 3 to 5%? Right? Well, what if it's a 6% loan because the bank is concerned about triage? So tracking interest rates. I do believe tracking the cost of fuel is important, and just read and understand the economy. And people are probably rolling their eyes right now. Okay, let me give you an example. It doesn't bother me, it doesn't impact me. Natural gas. Prices are skyrocketing. Russia controls it. Germany and other countries are trying to get off of it. So that means that somebody has to fill that gap. You still have to provide that. People go, that's not relevant. I don't use natural gas in my home. Do you have a light bulb? Do you have a computer? Do you have something made out of plastic? Natural gas is what's called feedstock. Feedstock creates heat to make all the widgets we use. If the cost of a widget goes up, most people have a budget that says I can pay X for a widget. When it exceeds that, they can't pay it anymore. Tracking those things and understanding the economy will help you succeed. That's the first thing. The second thing I would say is never run out of cash, because when those changes occur and we're in a recession, whether we have one or not, cash rules. Take that cash, go buy that deal and say, I can close. Those are my thoughts.
Absolutely. Yeah, I couldn't agree more. Are you sensing that there will be some discounted assets on the market when things really hit the fan?
I do. We're in a really weird period, and this typically. So I started in '89, so that was the '86 tax law change caused that recession, and I've been through multiple recessions. I guess 4 or 5 now. And it sure smells and feels that way, right? What's odd is when interest rates go up, cap rates should go up, and interest rates have climbed, but cap rates have not caught up yet. So who knows what that means?
Is it really, do you think the only thing kind of getting in between that is these rental increases that we're seeing?
That's a great question, Jonathan. And I think that's above my pay grade. I would say that everybody's nervous on signing leases and paying more in rent with all the kind of fear of what's going on economically. So there's a lag in decision making in some degree. Now, we've been incredibly successful. We just signed a new lease on an industrial building near Cincinnati, and that lease was signed before the day the tenant was moving out. The new tenant was doing an inspection. That was a 70,000 square foot building. We paid less than TI, tenant improvement, to that tenant. It didn't sit empty for a single day, and we're getting a higher rent than we budgeted. We're very strategic on where we buy things. That one was near Amazon's global airplane hub, cargo plane hub. So we try to get things to hedge against some of these question marks. but that's not always the case for anyone, including us.
Absolutely. And that was going to kind of be my next question. What are, you know, does the asset you invest in shift in a time like this in terms of like you completely are like, no, I'm not doing multifamily anymore? Or do you just kind of change, the strategy for your acquisition?
Those are great questions, man. So we just sold our last multifamily because right now is a great time to be a seller of those assets at the cap rate they're trading at, which again, as interest rates move up, that cap rate should also move up. We would certainly buy multifamily, and we would certainly not buy it at what the prices are trading for today. As far as what to buy or what to sell, the way I would think about this, and so much is this is the training from the Society of Exchange Counselors, which makes you really think with formula and transaction, is if somebody comes to you with an offer of $1 million and you don't accept that, my question is, would you buy that property for $1 million? And if you said no, well, you just did. If you don't accept his $1 million, it's the same as you saying it's worth $1 million and you pay $1 million for it. There are obviously tax issues and what do I do with the money and a variety of other things. But as you go to buy and sell, those are critical things to consider. People don't like retail now. They're scared of it. Well, to me, that means it's time to run in and buy, because I think that would give me more leverage in negotiating. And I really know retail. And that's probably the most important thing. It's not multifamily or retail. It's what do you know? If it's an area you'll know if there's value or not. I can tell you if I see a lineup of tenants in front of a national grocery or a Walmart or a Target, a big anchor, I can tell you who's in there. I can tell you roughly what they're paying. I can tell you what it would cost to replace them. Well, I can't do that with self-storage or 20-story office in a major metropolitan, but I can tell you that with retail. So do what you know with the asset acquisition.
Absolutely. Yeah, I couldn't agree more, especially in a time like this. So kind of breaking that down to the investor level, what's that communication been like, with you and your investor base and everything in terms of, the acquisitions, and what are investors saying? Are they still extremely bullish, or has there been some pullback?
My investors right now remain very bullish of investing with me because they've had a lot of great returns for a very long time, in part because of our skill as managers and underwriters, and then in a big part because of the market. It's like you were saying earlier, right? You can kind of trip and fall and you're going to be okay. But we're very conservative underwriters, and we take our fiduciary with our investors' cash very, very seriously. We place, if somebody's going to lose, it's going to be me first and investors last. So depending on that view, that really has a lot of impact. I would say through my network and the Society of Exchange Counselors, there's always a way to make a deal work. There is still way, way, way more cash out there than there are available deals, which means if you get a deal, you have probably a better chance of getting whole in a worst case. And I think most of our investors feel the same way. We have a 30-year track record, though. I think it would be harder, frankly, for people with a shorter record.
Absolutely. Yeah, I couldn't agree more. Despite all the turmoil, things do still point towards, very bullish. And of course, being conservative, getting everything correct so that if, it does hit the proverbial fan, you're not over leveraged and, not having to make capital calls and different things like that.
That's right. And we have kind of a wild card when, at least with retail. I'm a co-founder of a chain of kind of what you call version 2.0 of laundromats called Laundry Love, which take between 3,000 and 10,000 square feet. So if it's the right target and I got a vacancy, I got a tenant I can put in there that I know will lift up the center, that I know how their financials are, right? So we've kind of got that wild card. And the other wild card with some of this is when you find great property management and great leasing, you go, wow, that was phenomenal. Go find more assets around them. your team still applies in real estate. We have a team with a lady named Kimberly for assets in the Cincinnati, Florence, Kentucky MSA. And then we've got a team of two guys, Stuart and Jeff, on the leasing side. They're both with big firms. Kimberly's with Lee and Associates. I'm embarrassed I don't remember who Stuart and Seattle and Jeff are with. Man, they crush it. And I go, gosh, I wish I had more deals because I know they'll do a good job on those properties. And that you should keep in mind when you're looking.
Absolutely. Any tips on kind of vetting that property management whenever you're bringing in third parties to, kind of mitigate some of those initial hurdles?
Yeah, that's really, really important. And we've had really bad property managers that we've had to sue to end the relationship with.
Yikes.
Which is crazy when you think, we don't want to work with you. Why would you want to keep us as a client? I mean, just as terrible you can possibly imagine. Not theft, but one level below that. Yeah. So you ask for a list of references just when you're hiring. You actually make the effort of calling those references. And then you ask the references you call, they're only going to give good ones, right? What if I call you, Jonathan, and you're the reference for whatever, and I end it with my last question of, hey, Jonathan, who else do you know that they work with? You go, oh, they work with Bob and they work with Susan. Could you give me Susan's phone number? I'm going to give her a call too. So now I'm a step away from their reference and can go, hi, I was given your name by Jonathan. We're looking at hiring Lee and Associates or Sperry Van Ness or whoever. Would you mind telling me a little bit about your experience? So that's one. And then you ask the same question. In your property management, can you give me some examples of deals that went bad, of some areas where the client is dissatisfied, some areas where you need to improve? When they say everything's fine and rosy, that's when you move on to the next one. Leasing is a little bit more challenging. A great leasing firm, those guys tend to move on to sales pretty quick when the economy's hot because they can make, unless it's a huge, huge giant lease, they can make more money selling than they can leasing on commissions. So when you find a good one, grab them and keep them. Don't be stupid and argue over commissions. Overpay commissions. Oh, the other side of the firm wants 4%. We're supposed to get 3%, so I guess we'll go down to 2%. You know what? Actually, we'll overpay and keep your 3% because now you're in the front of the list with those leasing firms. Where you're going to run into challenges on leasing more than property management is, sometimes a good leasing team or firm or owner, they have their own portfolio as well. They're going to put their portfolio as the first one to show of vacant space before yours. You have to, ask how much of your portfolio that you're leasing is your own versus what you're going to take care of with mine. And they're going to say, well, we always treat them equal. That's not true. It's different for multifamily. With multifamily for property management, really, really vet them. Same way. Find out what lawsuits have you been in on your property. And if they're a big multifamily leasing firm, they're in lawsuits all the time because it's part of the industry. And just do your background check. Does that help?
Yeah, absolutely. No, that's incredible insight. I love the nuance there. Kind of overpaying, and obviously you want to take care of the good ones for sure. And the more people get into this, you start to really value those kinds of things, right? When you find a good one, find a good general contractor, all the things, you start to realize how important it is to maintain those relationships because you can't just walk down the street and find best in class anymore. So.
Yeah, that's right. That's exactly right.
Awesome. I love it. Well, I really appreciate that insight. We are coming up here close. It goes fast. But I've got 5 questions I asked all of my guests at the end. It's the final 5. First question, what's the best advice you've gotten from a mentor?
Make the offer. It's not up to you to say no, it's up to them. Let's say you're afraid of making a low price. They won't ever accept it. Well, dude, you don't know that. Don't say no. Let them say no.
Love that. That's awesome. What is it about your career that makes you feel like you're fulfilling your why?
My why is to mentor and help others and to try to leave a legacy that's to perform deeds and do tasks that outlive me, that death does not destroy. So my why from work is real estate has provided me the fuel to do my charitable efforts.
I love that so much. That's awesome. Favorite non-real estate or investment related book?
Oof, I read about a book a week, dude. So you're asking the wrong person. Courage is Calling by Ryan Holiday is great. God, Mike Motormouth, Profit First. Chop wood, carry water. Start with those three.
Okay, awesome. I love it. If you could have any superpower, what would it be?
Well, before I went to go work on the Ukraine refugee crisis, it'd be different. I wish I had a superpower that involved not so nice things against the president of Russia, but since that's not appropriate, my superpower would be not needing sleep, so I could just keep working and divide more time on helping, as well as continuing with building my company and my staff.
Yeah, that's definitely one I've heard before. That would be nice.
Yeah.
Everyone always said, do you believe there's not enough time in the day, or are you a big proponent of like time management and you can make enough time?
That's an interesting question, because people tell you, the president has just as much time as you. And I do a lot of teaching and a lot of weekend seminars, which walk you through everything from your 10-year vision down to execution and everything in between and mindset. And I would always teach them, Jonathan, before this trip to Moldova, that your most precious commodity is time. You don't know how much is in your time bank account. You can't replace it, right? It only depletes. Be wise with it, just like you're saying. The reality is, if you have enough money, or the more money you have, you can buy time. A private airplane is a time machine. Someone to clean your house is a time machine. An administrative assistant's a time machine, right? A nanny or car driver, all those things are time machines. The true asset, the true irreplaceable is freedom. And I did not realize that until I just got back from Moldova, and how incredibly precious and the tightrope it is that we're on in the US and our capitalistic free market to own real estate. So I don't know about time anymore. I know that, as Gary Keller would say, he says no to almost everything. So the things he can say yes to, he can really devote time to. Maybe that is time management, or maybe it's mastering saying no. And I'm not sure which one.
Interesting. Wow, that's a very incredible perspective. Thank you for sharing that.
Mm-hmm.
I love it. What's the best way for people to get a hold of you and learn more?
LinkedIn, Jason Mittman. Instagram, which I'm terrible keeping up on, which is JBO Mountain, JBO Mountain. It really just LinkedIn would be the best, number one.
Awesome. We'll link that in the show notes. Jason, thank you so much for your time and your insight. Honestly, so grateful.
My pleasure, Jonathan. Wonderful questions. Appreciate the time.
Thank you. I appreciate that. Hey guys, thank you so much for watching today's episode. I hope you really enjoyed it. Listen, I know it's cliche and you hear it all the time, but please don't forget to like and subscribe to the channel so you know when the next video is coming out. Even though this is technically a daily podcast, you know it's coming out the next day. We have a ton of content coming your way. So please like and subscribe. It helps a ton. Leave comments. Would love to know what you guys think. And we will see you on the next one. Thanks so much.